Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 26th, 2024, and we're diving into Newell Brands' latest earnings report for the third quarter of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Newell Brands' performance, especially as they continue their turnaround journey.
Absolutely. Newell Brands has been implementing a new corporate strategy, and it seems like they're making some headway. Let's delve into the details. Revenue and profitability overview. Let's start with the top line. Newell Brands reported net sales of $1.9 billion for the third quarter, a 4.9% decline compared to last year. However, there are some positive signs in terms of profitability. John, can you elaborate on this?
Absolutely. While the net sales have declined, Newell Brands has shown significant improvement in their gross margin, which increased to 34.9% from 30.3% in the prior year. This marks the fifth consecutive quarter of gross margin expansion, driven by productivity savings and cost reduction efforts. Additionally, their operating margin improved to -6.2% from -7.8% last year, indicating better operational efficiencies despite the sales decline.
And what about their net income?
They reported a net loss of $198 million, which is an improvement from the $218 million loss in the prior year. This improvement is largely due to their strategic cost management and operational efficiencies.
Operational efficiencies and future outlook. John, Newell Brands has been focusing on operational efficiencies. How has this impacted their financials and future outlook?
Newell Brands' normalized EBITDA increased to $250 million from $218 million last year, reflecting their focus on cost-cutting and operational improvements. They've also reduced their debt to $5.0 billion from $5.1 billion, which is a positive sign of financial health. Importantly, they've raised their full-year outlook for normalized operating margin, earnings per share, and operating cash flow, indicating confidence in their ongoing transformation efforts.
That's encouraging. How does their cash flow situation look?
Year-to-date operating cash flow stands at $346 million, which is lower than last year's $679 million. However, this is primarily due to significant working capital contributions last year. The company is still on track to achieve its revised cash flow targets for the full year.
Segment performance and strategic initiatives. Let's talk about segment performance. How did Newell Brands' different segments fare this quarter?
The Learning and Development segment saw net sales of $717 million, up from $694 million, driven by core sales growth in the baby business. The Home and Commercial Solutions segment reported $1.0 billion in sales, reflecting a slight decline due to foreign exchange impacts and business exits. Meanwhile, the Outdoor and Recreation segment faced challenges with sales dropping to $183 million from $231 million, primarily due to a core sales decline and unfavorable foreign exchange.
And what about their strategic initiatives?
Newell Brands is progressing with their realignment plan, which aims to enhance commercial capabilities and operational efficiencies. They expect to realize annualized pre-tax savings of $65 million to $90 million, with significant savings anticipated by the end of 2024.
Leadership insights and market challenges. John, what insights did the leadership provide regarding the company's performance and market challenges?
CEO Chris Peterson expressed confidence in the ongoing business transformation, highlighting the sequential improvement in sales performance and margin expansion. CFO Mark Erceg emphasized the significant gross margin improvement, which reached the highest level since 2020. However, they acknowledged the uncertain macroeconomic conditions and the need for continued focus on cost management and operational efficiencies.
It seems like Newell Brands is navigating through some tough market conditions. How are they planning to tackle these challenges?
They're focusing on optimizing costs, enhancing productivity, and streamlining operations. Their strategic initiatives, including the realignment plan, are designed to build a solid foundation for future growth despite the challenging environment.
Key takeaways. In summary, Newell Brands is making significant strides in their turnaround efforts, with improvements in profitability and operational efficiencies. Despite a decline in net sales, their strategic focus on cost management and margin expansion is paying off. John, thank you for your insights today.
Thank you for having me. It's been a pleasure discussing Newell Brands' progress.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Newell Brands' performance in the comments below. Until next time,